Attendees are in listen-only mode.
Welcome and thank you for joining us today for the Special Healthcare Reform Exchange Notice webinar. My name is Dee Frappia, HR Specialist at CGI, and I will be your moderator today. Today's presentation will be recorded and have over 60 participants, so all attendees of this webinar will be in listen-only mode. Throughout our presentation, we encourage you to interact with us by entering your questions and comments in the appropriate pane in the right-hand corner named Questions. We will do our best to answer as many questions as possible within the time frame allotted, but for those questions that are missed or additional questions that may arise, please contact your CGI representative and they will be able to further assist you. Please note that you may minimize or expand the panel on the right-hand corner of your screen by clicking on the double arrow button on the upper right-hand corner. Now I'd like to introduce our speaker of the day. Catherine Mirabili is CGI's Director of Human Resources and Compliance and is a Senior Professional in Human Resources, or commonly referred to as SPHR Certified. She currently manages the HR Support and Benefits Administration Department, which includes compliance, general HR questions and support, as well as FSA, HRA, and COBRA administration for CGI's clients. Catherine has over 20 years of experience in the human resources field and has a diverse background in compliance, staffing, employee relations, training, benefits, and compensation. In addition to her education and experience in the human resources field, she continually strives to dedicate herself to the profession by her involvement in the national and regional HR professional groups. Most recently, she served as the president of the Greater Nashua Human Resources Association and is currently on the board of directors for the New Hampshire HR State Council. Welcome, Catherine.
Thank you, Dee, and good afternoon, everyone. Welcome to our special webinar. As Dee has mentioned, my name is Catherine, and I'm the Director of HR and Compliance here at CGI. And the reason I decided to hold these webinars was because I have received a multitude of questions from a variety of clients all over New England and felt the best method to reach our clients was via these webinars. I hope you find this webinar useful, and please let your CGI representative or Dee know if you would like future webinars on a particular subject. Well, it looks like I've already forwarded to our agenda, so let's jump into what we're going to cover today. First, we're going to have an overview of the Notice of Exchange or Marketplace requirement. I use the words exchange and marketplace interchangeably in this presentation. I'm going to speak about who's subject to the obligation, what consequence, if any, for noncompliance, timing and delivery of the notice, and then we'll actually jump into a live demonstration. This will help you complete the notice yourself. Then we'll discuss some recommendations or considerations for you as an employer, and then as time permits, we'll review some questions or answer some questions. Please note that we will be sending today's PowerPoint and all materials to all registered attendees after this presentation. Please also note that the information and recommendation is not considered legal or tax advice. As most of you should know by now, the individual mandate is effective January 1st of 2014. This means that most Americans will be required to purchase health insurance or face additional taxes on their 2014 income tax return. You'll also notice that the open enrollment for the exchange or marketplace starts 10/1 of this year, 10/1/2013, and that aligns with our notice obligation as an employer. Now, the intent of the notice is to explain the availability of subsidized exchange coverage, but also the loss of employer plan tax benefits if the employee obtains coverage through the exchange or marketplace. For those of you that attended our healthcare reform seminar series that I spoke at, I spoke about us being a printing press as an employer, and I stick by that statement. We have to supply this notice to all current employees and new hires, regardless of eligibility. there were notices that were issued back in May, but they were in PDF format. And then more recently, there were released some modifiable Word versions. And the reason for that was to allow employers to add or modify the content of the notice to their own needs. Now, there are two model notices, one for employers offering a health plan and one for employers not offering a health plan. Today's focus is for companies with a health plan. I will state, too, that there are notices for Spanish-speaking individuals. I've already mentioned the intent of the notice, but below is what information must be included in the notice. You need to be able to include the services provided in the exchange, the eligibility for premium tax credits or cost sharing, the impact of purchasing coverage through the exchange, and then whether the plan meets minimum value and is affordable, which I will discuss in future slides. Note that the model notices are just that, they're model. So you don't actually have to use all of the information or the actual form. I recommend you use the model notice, but you don't necessarily need to. But I will explain in a future slide too what can be modified. So who is required to comply? Well, employers subject to the Fair Labor Standards Act, which I've written here as FLSA, which are most employers, need to comply, whether or not they offer a health plan. All employees should receive the notice regardless of eligibility, and the general rule of thumb is if they're on your payroll, they should receive the notice. The exception to this would be your COBRA participants, unless they're still an employee and receiving a paycheck. You don't have to send it to retirees, and you don't have to send it to dependents. So it's only employees. Now, penalties for noncompliance. This is an area that was recently updated as of the date of this webinar. There was no and had no specific penalties written initially. However, the thought was that general ACA or Affordable Care Act noncompliance penalties would apply. The way in which those noncompliance penalties apply is through a self-reporting mechanism on IRS Form 8928, and there's a civil penalty of $100 each day for an employer that doesn't comply. There are other issues in the ACA that you still would have to self-report, but for today's purposes, again, there's no specific penalties. The update that we received literally today, the day of this webinar, is the EBSA, which is a division of the DOL, has said that you do not need to, there is no penalty. So that's good news for employers. However, there still could potentially be a civil action suit brought against you if a plan participant believes that they have been denied a right. Originally, the requirement to distribute the notice was back in March, but they delayed that time frame. The technical release that's mentioned here on the slide, 2013-02, did then impose a deadline of October 1st of 2013. The deadline of October 1st is for your current employees, and then after that date, any new hires must occur within 14 days of your start date. I'd recommended on the third bullet here that you wait until closer to the deadline to distribute. Quite frankly, new notice, new information was given today. So additional guidance has been issued, but also due to new hires. The new hires, let's say if you decided to issue your notice September 25th and then you hired someone September 28th, you would be required to issue their notice by October 1st. You're not given 14 days, so that gap of time frame is a concern for new hires. So I recommend waiting as close as you can to the 10/1 date. There are two allowable methods of distribution. The first is first-class mail. The second is electronically. However, if you do deliver it electronically, you do need to follow some rules. First, it's for those that have electronic access, like those who have a computer as an integral part of their work duties, or the employee consents to receive the notice because they have a computer and an email address at home. However, you do need to make sure that you stress the importance of the disclosure if you do it electronically. You do have to offer a free paper copy, and for those that have consented to receive the notice electronically, they also have to have the ability to consent. They have to have the ability, to rescind the agreement to receive the notice. They have to be given the opportunity to receive it in paper. Now, initially it was presumed that in-hand delivery of the notice in the workplace would be allowed, And then guidance said different, said no, there's only two methods. One is first-class mail. The second is electronically. However, of course, new information has come forth. The DOL has informally confirmed that hand delivery is acceptable if the employer can ensure that the employees receive a copy. I issue caution on this. If an employer wants to make sure that they comply with the law, I recommend until formal guidance is given that you comply with the two methods of delivery, which is first-class mail or electronic. Now, for the electronic delivery method, we do actually offer a sample consent form. And the consent, and I'm going to put it up on my screen so that you can see it. And this is a sample form, so you can take this and modify it. If you notice here that we've also put in what other documents can be provided to an employee electronically, summary plan descriptions, summary of material modifications, summary annual reports, and I wrote notice of exchange. But these can be modified to comply with what your list is. Now let's jump into actually completing the notice. I'm going to put the notice on the screen at this point. And if you notice the first section in the top right-hand corner, it is highlighted. And it's kind of small to see, but it says expires November 30th of 2013. This form is absolutely fine for the 10/1 distribution date, but as you have new hires that get closer to that expiration date, please be mindful of a new model notice that may be issued. Moving further down this form, in the middle section, it says, how can I get more information? Now, on this area, I recommend putting the contact title, not a person's name. So, Human Resources Office Manager as an example. Also in this statement, I have highlighted, please check your summary plan description. Well, this is a good note for you. Please get your summary plan description out, have it available, and I'll explain why in a few moments. Finally, there's a website here called healthcare.gov, and it's telling the employee to go there. I personally recommend that as an employer, there's lots of information on this website. I recommend visiting it and signing up for email notifications from that site. It's a nice way to keep up to date with anything that's going on as it relates to healthcare reform. Now, moving on to the second page, this is called Part B. If you complete this first section, it's pretty self-explanatory. Your employer's EIN, your employer name, city, address. Who can we contact about employee health coverage at this job? I would recommend again using a title, not a name. Example, Human Resources. The phone number and your email address, self-explanatory. Now moving on to eligibility, it asks the question, as an employer, we offer a health plan too. If you offer a health plan to all employees, check off the box, all employees, and you can move on to the next question. However, most employers do not offer their health coverage to all of their employees. They have eligibility restrictions. So therefore, I've highlighted the section, some employees. And the eligible employees are, and I wrote an example, regular full-time employees working 30-plus hours a week. Here's where the SPD comes into play. Check the eligibility language in your SPD and your carrier agreement if you're fully insured. Make sure that none of the eligibility language conflicts with each other. You don't need one saying it's 35 hours a week and that you've written 30 hours a week. Just make sure that they're all saying the same thing. Now moving down to dependents. With respect to dependents, if you do not offer coverage to dependents, you would check the box that says we do not offer coverage. However, most employers do offer coverage to dependents, and therefore you would check the box that says we do offer coverage. Eligible dependents are. I wrote the example as employee, spouse, and children up to age 26. However, again, please check your SPD and carrier agreement to make sure that the language there are no conflicts in the language that you've written. So that's pretty self-explanatory, pretty simple, but the next step is a little complicated, and there are two sections to worry about. First is, if checked, this coverage meets minimum value standard, which I said I was going to explain, and then it's intended to be affordable. Well, minimum value is actually written up here in the first page. And it's kind of small print, so it's difficult to read, but I will read it to you. An employer-sponsored health plan meets minimum value standard if the plan's share of the total allowed benefit cost covered by the plan is no less than 60% of such cost. I know that's a lot to kind of digest. I'm going to make it as simple as I can for you. Most plans, most fully insured plans in New England meet this requirement, but I would definitely check with your CGI representative. We did receive information from Harvard Pilgrim Healthcare that stated for groups that have 50 or more eligible employees, all of those plans are compliant and meet minimum value. However, smaller plans may not, at least not this year, and you do need to check with the carrier, and I recommend checking with your CGI representative. 2014, however, Harvard did say that all of their plans will meet minimum value. So if by chance you are unsure or you have a smaller plan, I would recommend, and you can add on this, it's modifiable, remember? You can write here for unsure if meets minimum value, for 2013, but in 2014 have confirmed that it will meet the minimum value standard. However, whatever language you want, just so that it is understandable to the employee. The next statement I talked about was intended to be affordable. Well, affordability is defined as a plan that does not exceed 9.5% of employees' wages for a single plan. And I do recommend considering preparing a set of notices for employees that maybe this plan is not affordable for them. Now, the part that it says it's intended to be affordable, you may be asking yourself, well, how do I determine affordability? Well, there is a safe harbor that the IRS proposed, and it does say that you can take an hourly rate of pay. You take an hourly rate of pay for your hourly employee who is eligible to participate in the plan, multiply that hourly rate by 130 hours a month. That number, 130 hours a month, is the benchmark for full-time status for in the health plan under the ACA. And then you can determine the affordability based on the two numbers. If it exceeds 9.5%, then it's not affordable. If it doesn't exceed 9.5%, then you can check this box. So again, you may want to have a set of notices prepared in advance for those employees that the plan is not affordable to them. Now, some people may ask the question, I've heard about household income. It states it here. The marketplace will use your household income along with other factors to determine whether or not you are eligible for a premium discount. So even if your employee, it's affordable for them for a single plan, doesn't mean they still can't go to the marketplace and receive a subsidy. Now, moving on. The third page is actually optional. I've, in fact, highlighted the section that says optional. That's important to note because if you decide as an employer to not complete this, I recommend deleting the third page, except I would keep the area that says date of change here and maybe move it up to the second page so that you have record of the notice and the date of the notice that you completed. So let's go into page 3 if you decide to complete it, and I'll talk about some considerations of why maybe you should and maybe what you should do with this. On question number 13, the question states, is the employee currently eligible for coverage offered by this employer, or will the employee be eligible in the next 3 months? If the answer is yes, very easy, you put yes. If the answer is no, then no. So for the initial 10/1 obligation date, I again recommend preparing a set of notices in advance for your ongoing employees. It should be pretty easy for you to determine if someone is eligible, that would be answered yes, or someone who is not, then it would be no. If you answer yes, you would continue to question 14. However, if the answer is no, you would stop and return the form to the employee. But I recommend deleting questions 14 through 16 because remember it's optional and we can do this. Delete it so as to not confuse your employee. But again, I recommend keeping date of change here. So if you did say yes to this question, you'd move to number 14. Does the employer offer a health plan that meets minimum value standard? Well, we've answered this question. Most employers' plans, if they're fully insured, the answer is yes. So you would put yes and move on to question 15. For the lowest cost plan, that's only to the employee, how much do they actually pay in premiums for the plan? And this is the employee's portion of the plan, not the employer's contribution. How much does the employee have to pay, and how often? So if it's 25 hours a week, you would write $25, I apologize, a week. If by chance you have multiple payroll cycles and multiple payroll periods for employees, if you have a group of employees that they're paid every 2 weeks, you would have to write the amount, let's say $50 every 2 weeks. Again, maybe preparing a set of notices based on payroll cycle. Now moving a little bit further down, it asks if the plan year will end soon and you happen to know the health plans offered that will be changed. If you have your new health information, you can complete it number 16. But if you don't know, stop right there, erase number 16. So let's say, for example, you're a calendar year plan and you send this out before the October 1 obligation. You don't have your new plan information. I recommend deleting number 16. However, if you have it available, go ahead and complete it. And then, of course, finally, mark the date of change. This is an easy way for you to defend which notice you gave and what information was contained. So some of the considerations. If you only complete pages 1 and 2, you may want to consider that for the initial obligation, which is October 1st, or you can actually decide that for even new hires. But you also have a choice to complete all 3 pages. Maybe you just want to complete all 3 pages for the October 1st distribution date, and then thereafter for new hires only complete pages 1 and 2. That is entirely your decision. Just keep records of what you've done, how you've done it in a file. And I've mentioned sets of notices that should be prepared or that I recommended would be easy to prepare in advance. One would be for ineligible employees. One would be for eligible employees. One would be for employees on a different payroll cycle. I failed to put it on the slide, but another one could be based on the affordability. If it's not affordable, that would be another one. The last one would be is if you decide to do the 3rd page, it would be for new hires. Have it ready to go, and you just have to input their information of when they are eligible. Some other recommendations. Employees barely read other communications like COBRA notices, even memos from a company. However, we still here at CGI recommend that you do provide something to the employee that supplements the notice, because it will generate confusion and the employees will want answers. So in your memo, the question that you should be able to answer is, what do I need to do with this notice? Now, in planning for this, we at CGI did prepare a sample memo that you can use. You can, again, modify it to your needs. And all you have to do is you can insert your own logo here, and it talks a little bit about, the notice of exchange. And again, modify this to your audience. But the important part that I always try to highlight is right here. You should weigh your options carefully. If you decide to buy insurance through the marketplace instead of at your work, you lose employer contributions that you currently receive from your employer. This is a perfect point, which is why here at CGI we do provide total compensation statements to employers that request it. These are a great way to show employees the benefits that they actually receive and the dollar amount associated with it. The second point is if you leave your plan to take coverage through the marketplace, you may not come back into the plan until the next open enrollment. Well, this is true, unless they have a family status change. If they don't like the coverage they receive at that marketplace and they decide mid-year, oh, this is terrible, well, it's a little too late unless they have a family status change. That's important for them to know. And from what I understand of the marketplace coverage, it really isn't going to be as exciting or as lucrative or as it doesn't have the same coverage levels as a group health plan does. So I think they're going to be, in my opinion, I don't believe it's going to be the best plan for individuals, but that's to be seen. The third bullet is, under our plan, you currently pay the premiums with pre-tax income. Now that's if you offer this option to your employees. Most do. Most offer a pre-tax capability. This means that you do not pay payroll taxes on this income, and that's true. They lose that, which is bullet number 4, if they go to the marketplace. The marketplace specifically said if you go to the marketplace, you have to pay for those premiums with post-tax dollars, and they pay it directly to the marketplace. Now, here's some general tips for HR professionals. Engage your management. Ensure that they understand what's going on with your own benefit strategy and how the public exchange fits into that strategy. It's safe to assume that if your line management don't understand that your employees won't. So possibly hold some educational meetings with your managers. And even if it's just those 4 bullet points from the memo that we gave, which is the pre-tax contribution that they lose, the employer contribution, and that they can't come back into the plan if they don't like the plan at the exchange or the marketplace. We all know that to be competitive in our own industries, our benefits are important as part of our total compensation package. So it's important that we are able to explain to our employees our benefit strategies, just like we did to our line managers, and how that impacts or how that interrelates with the exchange or marketplace. And target the communications to different groups of employees. Think about the messages that impact specific audiences. And we've even had an employer that's held a town hall meeting, and I think that's a great idea. Possibly consider holding these town hall meetings or small group meetings to just kind of answer questions that you know. Another recommendation is definitely explain required actions and timings, like what the employees need to do, by when. We do have something prepared. It's a white paper that you can either give to your employees, or you can have it, and I'm putting it on the screen right now, or you can have it available. This white paper is called What Healthcare Reform Means for Me. Now, yes, it was issued in May 2013, but this still applies. It does speak through what coverage do I need to carry in order to avoid paying a penalty. And it speaks to minimum essential coverage. It talks about exactly what the penalty is. Do I have to take the coverage my employer offers me? Again, this is a talking point. Where can I get coverage if I don't want an employer's coverage? And what should I consider when I decide to enroll? What are the considerations? And it talks about other mandates that are in effect. So this is a great informational tool for your employees. And again, you can supplement this alongside your memo. No matter how much we prepare and no matter how much we communicate with our employees, they will always have questions. That's why we have the jobs we have. What I recommend is determining ahead of time who would be handling the questions. I recommend having multiple people, maybe 2 or 3, that can answer these questions so that not one person is inundated. Identify some likely questions. You may even want to use the white papers that we have. So, in the questions we answer today, have those prepared and have other resources prepared in advance. I mentioned the government website, healthcare.gov. However, there is also an IRS released, I'm putting this on the screen right now, a piece called Healthcare Law Online Resources. If you scroll down below, it actually identifies different groups of people and what questions or websites they can visit. For individuals and families, there are 3 different places that they can ask questions. For employers, it looks like there's 5. So this is something that you could also hand out to your employees. It may assist them in looking and researching information. Now, these are some frequently asked questions that have come to us before this webinar. We have many that we didn't write down, but these are the ones that I get the most. The first question is, will employers have to redistribute the notice if they receive their plan information after the 10/1 deadline? I kind of referenced it earlier, but let's take the calendar year plan as an example. They issued the first notice before the 10/1 deadline. They then received their new plan rates and new plan information November 15th. The question is, would they have the obligation to resend that notice, because they have new plan information? Well, from what we know today, which is how I always preface my answers when it comes to healthcare reform, from what we know today, no, the obligation was to send it out October 1st. But for any new hires after, if you have the new plan information, absolutely you do need to put that information if you decide to do plan, page 3, or at least complete it appropriately based on your new plan. So there is no requirement to redistribute. The second question is, will employers be required to distribute the notice annually to all employees or just new hires? Again, from what we know today and what guidance is available to us, the answer is no. You do not need to distribute it annually. but keep your eye out. There's nothing saying that it will change. It's not unusual for the government to come to us and say, oh, by the way, resend this all October 1st, very similar to the Medicare Part D notice. Third question we received is, can employers combine delivery of the notice with other communications, like the initial COBRA notice, maybe payroll? The answer is yes, but I recommend documenting the methods and the contents of what you put together. Now, before we get into your questions, I wanted to answer a few more questions that we have received in addition to the ones I stated in the previous slide. The first question is, what is CGI's role in the completion of this form? Well, as CGI is your advisor, we are more than happy to assist you in completing the form. However, it is your obligation to ensure that the information is correct, and it's really not that challenging once you've gone through this. Now, you may have heard of some third-party administrators as a service, and for a price, I might add, that they're willing to prepare and send them for you. I issue some caution with this. I always have concern anytime you use a third party for an obligation. You need to check your service agreement. Make sure that the roles and the responsibilities and the process of sharing information back and forth is outlined. Look to see what financial remedies you have in place if they should make a mistake. What type of audits do you need to have? The obligation is, within 14 days. If they don't send it, you may be outside of that time frame. And they also won't be able to supplement their notice. It'll be a mass notice. They won't be able to supplement it with your memo that you've created. And we do recommend that supplement. So it's going to be a mass distribution. And finally, it's very tough to manage a third-party administrative relationship. So be mindful of those challenges. So with that, I'm going to go ahead and let Dee ask the questions from our participants.
Okay, our first question of the day is, when you give the notice to new hires, does it have to be mailed first class, or may it be included as part of the orientation new hire package?
Well, the funny thing is that as we stated in our webinar today, that recent informal guidance was just issued, that an employer could hand deliver the notice, but I'd be cautious as an employer. You would be best served to comply with the methods of distribution until there is formal guidance. I would not want to be challenged as an employer, and I do want to be able to prove that I've sent it. But again, it's the employer's choice. Just document the way you've done it, document the method of distribution.
Okay, great. And when doing our affordability test, we're using the least expensive plan to calculate the employee's contribution to determine if it exceeds 9.5%.
Yes, if you offer multiple plans, you would use the least expensive plan that you have, but make sure that the employee has access to enroll in it, and then you would calculate the affordability off the single rate of that least expensive plan, not the two-person, not the family.
Okay. And does the notice need to go to the owners of the company as well if they are paid through payroll and also pay premiums for a health plan through the company?
This will depend on the structure of the company, whether it's a C Corp, an S Corp, whatever. I'm assuming that this is not a C Corp that's asking this question, probably an S Corp or a similarly structured company. If that's the case, then the owners are not considered employees, but they're considered the employer, and therefore would not be subject to necessarily receive the notice. The law specifically outlines that, quote-unquote, employees are the ones that need to receive this notice, not COBRA participants unless they're still working for you, retirees, or dependents. They don't need to receive the notice. I just want to clarify for COBRA participants, there are certain COBRA qualifying events, one being a reduction of hours. That means that they're still working for you, but they're not eligible for the plan anymore. That's what I meant by a COBRA participant, not one that is a COBRA participant by virtue of termination.
Okay, thank you for that clarification. We have another question here. It used to be the 9.5% of the household income that was used to determine the affordability, but you stated 9.5% of the individual employee income. Can you clarify?
Yes, that's a good question. The employer is only held to the standard of determining affordability for their employees. but the employee still may be eligible for a subsidy in the exchange based on household income. The government basically recognized that employers would have difficulty in obtaining household income from their employees. I, as an employer, would have been responsible for finding out my employee's spouse's income, and they recognized that that was just challenging, if not ludicrous. So they did clarify for an employer, responsibility is just determining affordability for my employee. But from the employee's perspective, they do have the ability to go to the exchange, and they do look at household income. So there's two different versions or two different methods of looking at it, one from the employee's perspective and one from the employer.
Okay. If I have an intern that are not offered health insurance, would they be included in the non-eligible group?
I'm assuming the question is referencing the group of notices that you prepare in advance. Actually, they would get the same notice that outlined eligibility, i.e., it's regular full-time employees working 30 more hours a week. They would then need to inform the exchange that they do not meet those requirements because they're not a full-time employee. They're not eligible for the company's benefits. You, as an employer, would have fulfilled the obligation by providing this notice to these interns that are paid interns, I'm hopeful of. Whether or not they meet the eligibility is their own obligation to prove. But most likely that these interns are probably covered under their parents' plan, but that really depends on their age. If they're older than 26, potentially not.
Okay. Is it a requirement that employers understand what is offered by the exchanges, even if the employer offers a plan?
Caution on this one. It is definitely not a requirement that an employer understand what's being offered by the exchange. In fact, I recommend that you do not attempt to assist your employees in the decision-making process. Similar to any state or federal agency, I have the same, kind of statement. In other words, an employment division, Medicare, Medicaid. You wouldn't necessarily give information to your employees about Medicare or Medicaid or even unemployment other than what you do know. You could be providing incorrect advice, which is an issue. And there are so many plans that are going to be available in the exchange, it would be impossible. It's almost like trying to explain another employer's plan. ABC company across the street, I'm not going to know their plan as well as I know my plan. And I could not even begin to think about knowing more plans than just my own. So no, I recommend that you don't, and it definitely is not a requirement.
Okay. Can affordability be calculated on a 40-hour work week if we don't have a 30-hour work week for employees?
Yes, the intent to be affordable, that was the question. This was intended to be affordable. They gave the safe harbor because it's for employees that you don't know how often they work, how much they work necessarily. So whatever calculation you use, make sure you document the method. So remember that the 30-hour week or 130 hours a month is the safe harbor that you can use if you're not sure if the employees will work a specific amount of hours. But if you know for sure that your employees are working 40 hours a week, absolutely feel free to do that calculation, but make sure that you've documented what you've done.
Okay. And I believe we do have continued time for additional questions. And our next question is the reach of the Mass or Vermont healthcare notices dependent on employers' residents or the employees? That is, as a New Hampshire employer, do we have to comply with Mass notice requirements for employees residing in Massachusetts?
From our understanding in Mass, the notice they provided to employers to distribute is optional. So for ease of administration for multi-state employers in compliance with the federal law, I recommend sending the federal notice. If you only have 2 locations and you do know this information, you want to send the one in Mass, that's fine. But from a global perspective and for ease of administration, I absolutely recommend just keeping to the federal notice.
Okay. Can you explain more about how the exchange regulations deal with employers who offer a 125 plan?
So this question came about because what the regulations state is that individuals that go to the exchange or to the marketplace for their medical insurance, and this is instead of them obtaining the medical plan through their employer, they're not able to purchase their medical plan through the exchange on a pre-tax basis. So individuals who participate in their employer's health plan can definitely pay for their premiums pre-tax if the employer has a 125 plan. So it really hasn't changed what employers offer, or it doesn't change what the pre-tax capability for an employer to provide to their employee. It really deals with an employee not being able to go to the exchange and getting the pre-tax benefit.
Okay, thank you. Can you further explain navigators? Or
Yes.
navigation?
Navigators, yep. A navigator, for purposes of healthcare reform, is someone who will be assisting these individuals to help them buy insurance in the marketplace. This is not the broker. This is not an employer. This is specifically hired from, the government. They're actually trying to hire navigators or have hired navigators already.
Okay, excellent. Does the employee contribute for dependents need to comply with the 9.5% rule? We cover all employees' premiums, but only a modest amount for dependents.
Oh, so the employee contribution for the dependents. Okay. Yep. So for purposes of the 9.5% affordability standard, the employer is only concerned with the affordability of the cost for the individual plan, which is the employee contribution to the individual or single plan, not the employee's dependents. In other words, the employer is looking at the cost to the employee-only plan, even if they choose to enroll in a two-person or family plan. So if you're an employer that pays for your employees 100%, but you provide they have to buy their dependent coverage separate, you've met the affordability standard because you've made it affordable for your employees because, quite frankly, it's free. If they choose to do a two-person or a family, then that's another story.
Okay. Our next question is, if our business is located in one state, but we employ people who live in multiple states, do we have to tell them which exchange to go to? In other words, Massachusetts residents to Massachusetts Exchange, New Hampshire residents to New Hampshire Exchange.
That's a great question. And actually, the employer is definitely not obligated to specifically outline the details of which exchange marketplace that the employee should visit, which is why it's recommended to send the federal notice. The one portal to healthcare.gov will ask them what state they're in and will direct them to the correct website depending on where they live.
Excellent. We do have time for 2 more questions. And our next question is, if you offer a plan, are there minimum requirements as to which employees must be included in the plan?
There are multiple rules surrounding eligibility of an employee to a company's health plan. If this question was meant to ask whether or not there are minimum eligibility requirements relative to healthcare reform, there are some implications in 2015, what they call the employer mandate, for companies that have employees with more than 50 employees, and if they're not offering a health plan, and for employees that are working at least 30 hours a week. So again, the employer mandate is only for employers with 50 or more employees, and you have to offer insurance for employees working 30 or more hours a week. But that's not until 2015. It's only meant for larger employers, but there are multiple rules, as I mentioned before, and I definitely would recommend that this person contact their CGI representative to receive more information on this topic, things like the agreement that you have with the carrier, your ERISA requirements, non-discrimination, you have to make sure of that. So those are some things that we can talk to, they can talk to their CGI representative.
Okay. And our last question of the day is, do employees pay the exchange directly, or is the company expected to withhold and submit payment for the employee?
Generally, and this is from a federal level, states may have something different, but my understanding today is that if the employee goes directly to the exchange or the marketplace to purchase insurance, they're going directly, not through the employer, then the employee would pay the marketplace directly.
Okay, excellent. Well, thank you very much. That does conclude our question and answer session for today. And we want to thank you for joining us for this special webinar. And as a reminder, the presentation and materials discussed today will be forwarded to all registered participants. Should you have any additional questions, you certainly may contact your CGI representative. Thank you.